Don Jr. wants to take his new company public. The newest CPI reports just dropped, and Trump's newest tariff on aluminum. How is all of this related? How will it affect the stock market? And most importantly, how will it impact your life? This is Focused Economics, and today we're going to get into what this means for 2025 and beyond. Grab a gun. The newly re-elected President of the United States and his family have their fingers in a lot of pies. The case of the grab-a-gun merger, however, is one of pie consolidation, if you will. Omid Malik is the head of Trump's special purpose acquisition company, Colombier Acquisition Corp. Donald Trump Jr. was recently appointed as an advisor to Grab-A-Gun, an online retailer of firearms, ammunition, and gun accessories valued at over $150 million. Together, they will make quite the team, as the two companies have agreed to a merger recently. Upon completion of the merger, Don Jr. is poised to take a leadership role in the future of the brand, being slotted for a role on the board. While any Trump business news is noteworthy these days, what makes this an interesting case is its position in the stock market. Grab-A-Gun will be joining the market, trading under the symbol PEW, marking their entry into the public stock circle. Why does that matter? Well, they're only the most recent conservative-led company to join the stock market in recent years. The common belief is that conservative businesses feel confident that under Trump, the markets will continue to grow and thrive, making it the perfect time to get in on the action and take advantage of that growth. They join the likes of Truth Social parent company Trump Media and Technology, Chainbridge Bancorp, and video sharing platform Rumble, among many others. The company was founded in 2010, and in the words of Donald Trump Jr., much like Truth Social, Public Square, and Rumble have led the charge to protect the First Amendment, Grab-A-Gun will do the same for the Second Amendment. CPI. The newest Consumer Price Index reports have hit the streets, and they speak volumes. But what does any of it mean? Well, the latest rating ranks the CPI as being up 0.5%. This continues a recent trend after December's numbers indicated it was up 0.4%. This means different things for different people. For the stock market, it means prices are going up, profits are going up, and spirits will undoubtedly be going up as well. For the average consumer, this can mean a period of tightening your belt and riding out the wave is in store for the foreseeable future. The one thing a rising CPI means for everyone, though, is the prices of virtually everything are going up. What is CPI? What is CPI, though, and how does it measure those things? Well, CPI is a metric used to measure inflation. Not the only metric, mind you, but it is an important one as it measures the actual prices of products around the country. In other words, the Consumer Price Index, CPI, measures the monthly change in prices paid by U.S. consumers. The Bureau of Labor Statistics, BLS, calculates the CPI as a weighted average of prices for a basket of goods and services representative of aggregate U.S. consumer spending. The CPI reports are closely monitored by policymakers, financial markets, and businesses to determine the health of the economy and to predict spending patterns among consumers. For businesses, a rising CPI can be good or bad news depending on how high it rises and how the economy has been operating in previous months. A rising CPI with steady spending is often a good thing, meaning consumers are capable of weathering the rising prices and are still engaging with the economy at a normal rate. If spending is down but CPI is rising, that means the opposite, and households are choosing not to spend money in more uncertain times. Aluminum tariff. Tariffs have been on everyone's mind since the election. Donald Trump has made good on his promise to lay heavy tariffs on imports from China and is in negotiations concerning tariffs and a potential trade war with Canada and Mexico. Among the things hit by the highest tariffs were imported steel and aluminum, both receiving 25% tariffs. The U.S. is one of the largest importers of foreign aluminum in the world, importing an approximate 4.5 million metric tons in 2024. According to some sources, this could mean that as much as 50% of the aluminum used in the U.S. is imported. It is an incredibly important resource for American manufacturing, as it is steel's cousin. Imported steel has been on a decline over the last several years, as tariffs have made it increasingly more difficult to afford foreign products. As with every new financial year, there is good, there is not so good, and there is unknown. And the only way to stay ahead of the curve is to stay informed. Consider giving that subscribe button a click to stay informed on all the most pressing financial and economic news that matters to you. Now, back to the video. What does this mean for the stock market? As with any change, it can be hard to predict how the markets will react. With the implementation of tariffs, for instance, the market saw a dramatic dip as investors raised concerns over their portfolios. However, in the case of tariffs specifically, it all depends on how the situation is handled going forward. Steel industries and users have operated under tariffs for years now. Granted, those tariffs were much lower, but they existed, and the effect has been largely positive. With the right amount of pressure on the industry and a steady, controlled range of pricing and availability, the American market adjusted to the higher prices of American steel. Now, across-the-board changes can be devastating and easily mishandled, but the fact is, in the right hands, the tariff situation could level itself out over the coming years after an initial market shakeup. With Trump-affiliated companies diving headfirst into the stock market, we could see an influx of faith in the system, which would definitely help bolster it as the economy navigates unknown waters. And with the rising CPI, companies trading on the market could see record profits over the next year. The stock market is primed and ready for a lot of uncertainty and a lot of change, but there are signs it could be good for investors in the long run. What does that mean for you? In the immediate, however, the average American household will not be seeing any real relief on the horizon. This particular period of rising CPI has not been accompanied by continued spending, which indicates prices may be outpacing what the average consumer can justify. Luxury spending has seen a dip, and with the price of everyday items still on the rise, even necessary spending could become more difficult in the near future. The good news for the consumer is that if you can, now is an excellent time to start investing. It may seem like an odd time for many to be spending extra money on things that don't necessarily see an immediate return, but that's kind of the point. Investments are intended for times like this. Investments are how you hedge your bets against harder times. So if you have a few bucks laying around, maybe consider putting it into American steel and aluminum companies. What other companies are you looking forward to going public this year? How has the CPI report affected your personal portfolio? Let us know in the comments, and we'll see you in the next video.